and welcome to this week's Market Outlook webinar with me, David Jones, and in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, the 8th of Feb at 12:30 in the afternoon. So this is a webinar that we do every week with Aondo, 12:30. And it's a look at a mix of different markets, so a bit of FX, currencies, some of the indices, the Dow, S&P, FTSE, and the DAX, and commodities, gold and oil, just to see what's been going on over the last few days and what to look out for in the days ahead. So that's this one. So this one happens every week. I also do twice a month with Aondo a webinar on social trading, where you can copy and follow other traders. And I've started writing a bit more about this on my website. If you have a look on the website, jonesthemarkets.com or tradeafter.com, it'll take you there, this whole idea of social trading. But I think the risk warning has been up for long enough now. So just before we start, quick word from our sponsors. So with Aondo, you can trade for yourself, obviously do self-directed trading, but the big thing that they do is copy trading, and they're running this social trading championship where you can enter, make your trading public, and see how you get on. So to find out more, there's $250,000 up for grabs, and to see more details and see the ranking, I'll show you the rankings in a sec. If you go to next-trading-star.com, you can see the details there. And if you go to that website, I was looking at it just before we started, you see how well everyone's doing at the moment, how well or how badly, I should say. So top of the moment is this one, Drepunkt, who's made, I think this is over the last month, 5 weeks, nearly a 30% return with a drawdown of 14.7%, so that's pretty healthy. But you can see the numbers drop off fairly quickly. So if you fancy your chances of winning this competition, if you go to next-trading-star.com, the details are there. Right, let's get into it. So what we're going to look at is we're going to use Aondo's trading platform, TradeHub. Here we go. So we'll bring up the charts. Before we start, let's start off with currencies. I think there's some interesting stuff going on with currencies. It's a bit of a quiet week this week because there's nothing really in the way of major economic announcements. We had the payrolls last Friday, the US unemployment numbers. The number came in, 225,000 jobs were added in the US in January versus 175,000 market expectations. So better than expected. But I thought I'd just start off with this picture. I took a screenshot. Some trading companies let you trade the dollar basket, some don't. And I couldn't find it on Aondo's platform. So I thought we'll start off with just a quick screenshot of a chart. This is the dollar index. And what the dollar index is what it says in the tin. It's like a synthetic chart of the dollar. So it's made up, it's the dollar weighted against the euro 57%, the yen 13%, pound sterling just under 12%, Canadian dollar 9%, Swedish krona 4%, Swiss franc 3.6%. I don't have that information in my head. I'm reading it off another screen on Wikipedia. But what we can see here, we've seen the dollar index has been in decline since the beginning of the year. It's dropped from sort of the 103.50, 103.75 level to sort of briefly down towards 99 in recent days. But it's showing signs of turning the corner. So I'm just wondering, I mean, there's a bit of resistance up here at 101. I'm just wondering if maybe we are seeing now a bigger shift in sentiment towards the dollar. You know, we've seen, for example, a good run in the pound over the last 2 or 3 weeks, and we've seen the pound come under some pressure in recent days. But I just think the dollar index is an interesting one to keep an eye on. Because it's like a synthetic basket of different currencies against the US dollar, and there are signs over the last the last week or so of this little uptrend forming. So I think it's an interesting one to keep an eye on. So that's the dollar index. Let's get into today though. Let's start off by looking at the pound US dollar. I think we've had pretty scrappy trading. I think we'd say on pound US dollar, and I'm only saying that because I got stopped out yesterday on a trade. But we'd had this run since Theresa May's Brexit speech in the middle of January, and we'd seen the market run up to as high as 127 last week. But as we know, this is a daily chart, that we're looking at here, if we take a look at the big level on the upside, it's 128, give or take 25 points. 128 is the big level to watch for pound against the US dollar. And I think it's difficult to get too excited about a longer term recovery until we see that level break. I think if we do see 128 broken, then we can start being much more aggressive and look for a run back up to the summer highs, just shy of 135. But it's interesting that I think yet again, pound against the dollar, we've seen these nerves come in up at these levels, and I think so much of this market at the moment is politically driven, with the various murmurings about Article 50, Brexit, what's it going to look like, this sort of thing. That doesn't mean, it's an impossible market to trade. We've seen fantastic trends in the pound against dollar. This is the hourly chart we're looking at now. So we're looking at what was happening intraday. We've seen these moves up. We've seen big levels hold, and this was the basis of the trade that I did just the other day and got stopped out on. I think it was the near enough the 124 level. I was looking for that to hold. So I bought it, I think was it yesterday or maybe the day before yesterday, but around about here. And then yesterday morning, actually it would have been the day before yesterday, market slipped through, broke that level. And it's recovered strongly since then, but I think it's maybe over the last week or so lost some of the momentum, that we had. We had clear momentum here on the way up. So I think it's maybe, for me at least, it's a bit of a wait and see market at the moment. That bear in mind we do have those summer highs, a couple of 100 points higher than where we are now. So it's maybe not surprising that we've seen some of the dollar bulls take their money off the table. So it's a bit more of a I think maybe the risk is a bit of a scrappier market in the days ahead until we find some real direction again. So I think it's a difficult one to call at the moment, but it's always an interesting one to keep an eye on. And like I say, the big long-term level is that 128. If we can break through there, then we can start getting excited. On the downside, and if we did see a big sell-off again, and clearly where we'd be looking is if we saw on the daily charts back towards the 120 mark, it looks like a buying opportunity. So at the moment, we're somewhat in the middle of that range. So it's not an easy market, I don't think, to call from here. One that's interesting, if we take the, if we're going to stick with the pound, but let's take the dollar out of the equation. So euro sterling. Let's just remind ourselves where we've been on euro sterling. Understandably, we saw the euro appreciate against the pound after the referendum last year. It was trading around about 77, and it's been as high as 91. So we've seen almost a 20% move by the euro into September. And since then, it's been a bit, again, it's been a little bit sort of directionless, but there are some still some really big levels when it comes to euro sterling. We saw the dips hold ahead of the 83 level again. I'd argue the moves we've seen since December, suggest that we could have been seeing the euro against the pound gearing up for maybe another move higher. And the moves over the last week have been really odd. I think I was talking about this on last week's webinar, and I ended up buying in on the weakness around about 85.15, I think, when it just, it sold off, but it held these lows, and the market ran up about 120 points. But in the last couple of days, we've given that back. But for me, it doesn't change anything really. I'm a big fan, if you've attended these things before, of the importance of previous highs and lows. And for the last couple of weeks, we can see in euro sterling, what a good job this sort of 84.70 to 84.90 area has done in holding the price up. So I think even though it's been clobbered over the last couple of days, I'm still in my trade, so I'd be looking for maybe a run back up towards these 86.40 levels. And I think for me, the thing that sort of sets this trade up is the fact that it had been in decline for the last couple of weeks. If you're a fan of the trend lines, you can draw one on euro sterling, maybe from the highs or maybe from this little fiddly bit here, and our trend line looks something like that, and we've broken out of that. So I think what we're seeing here, 84.70, 84.90, is arguably a base for euro sterling. Bear in mind I'm a bit biased here because I am long, but from here it looks a reasonable trade for a run back up to here. And if we can break through these highs, maybe a bit further out, we're going to go back up and have a look at 8,800 plus. We'll see what happens, but the bias for euro sterling for me seems to be a bit more to the upside and looking for recovery. Let's just jump off currencies for a bit and take a look at stock markets, then we'll come back to some other currency markets. It's interesting, we talked about the DAX a bit in recent weeks, because we were doing the webinar, was it a couple of weeks ago, or maybe 3 weeks ago, and as we were doing the webinar, the DAX had broken out. So on that day, we'd had almost like the best part of a month of the DAX stuck in this relatively tight trading range, really going nowhere, up, down, up, down, up, down. And then we had the breakout. And I remember saying at the time, one of the problems with breakouts, I think one of the challenges with breakouts, if you're trading breakouts, is, well, do you jump on the breakout as soon as the market starts going? So as soon as it breaks the level, bang, you're in, and you have a tight stop and you're banking on momentum to carry the market further? Do you wait a day to make sure it is breaking out properly, but then run the risk of getting in at a much worse price than if you'd just jumped on the breakout straight away? Or do you wait for the pullback, and the risk is the pullback never happens and you just sit there and watch the market run away? Well, what's happened with the DAX is it's pulled back and more. So we had this break here. If we look at the levels, it's pretty vicious, to be honest, where the level was 11,700. The market ran up nearly a couple of hundred points over the next couple of days from that breakout. But then over the course of the last couple of weeks or so, not even a couple of weeks, it's given up all of those gains and more. So it's pulled right back into the range. But I think it's interesting. Again, it's interesting down here, and the FTSE is a similar one on a slightly shorter term timescale. We'll look at the FTSE in a minute. It's interesting that we do have these big levels just below. In DAX terms, a level 130 points away is nothing. They can do 130 points in a morning. But we have these levels, below where the market is currently trading, that you'd expect to provide support. So you could take the view, this strength, or this breakout showed strength in the market. All right, it's given it up, but if we were going to buy, well, the perfect time to buy was maybe yesterday or the day before yesterday. But if we, see weakness down to this sort of area, having stops below here, or ideally below the late December lows, just ahead of 11,400, looks like, again, a reasonable trade if we're expecting the market to rotate its way back up to 11,900. So it's interesting, I think, the move we've seen on the DAX following that breakout. When we were talking about this, I would never have thought we'd be all the way back here a couple of weeks later. Let's take a look at just the big picture on the DAX, because it's not plain sailing though, because we're still, even though the FTSE and the Dow and the S&P are not, have made fresh all-time highs this year, it's not the same for the German market. We've still got plenty of hurdles, not a million miles above current levels. I suppose that the big hurdle is the high. That is the all-time high, isn't it, from March 2015 up here at 12,400. All right, it's 900 points away from where we are now. So there's definitely some space for the DAX to move higher. But I just think it's interesting that it's been knocked back to these levels after that breakout, and arguably this is a buying opportunity with stops below. Let's take a look at the FTSE, because the FTSE has done something similar, but on a much shorter time frame. I did buy the FTSE yesterday, and so far it's gone nowhere. But let's just remind ourselves on the daily chart what it looks like. So we had this run this year, and just to repeat, I think what I said last week, we had the headlines in the papers, FTSE hits fresh all-time high. I think it was every day for 11 days. So we had this really incredible run in the FTSE of it just going higher and higher and higher. And the market sold off. And I think, when a market's been that strong, you have to treat any sell-off as an opportunity just to get back in on that trend. And the trick is, a difficult bit as ever, is when does it stop going down? But I think in recent days, we have seen the end of that correction. So let me just flip over to the hourly. So for me, the thing that builds the argument that maybe the next major move for the FTSE is up is this sort of thing. If we took like a trend line off the highs, so it looked, I don't know, let's say it looked something like that. So we had some messy trading. Oh, if I can get my lines right. We had some messy trading down here, but the market has managed to find a base around about 7,090, 7,100 level. Has moved higher. We broke out yesterday, saw a strong move first thing yesterday morning, breaking out to these old highs from the last week of Jan. the market got knocked back, so I bought in yesterday looking for this level to hold. It's quite a short-term support, and it's a bit of a, I suppose you could say if you're going to push it, it's a bit of a sort of a head and shoulders-y thing. But basically for me, the last couple of days, the market's been well supported by 71.60. So for me, my stop's the other side of that at 71.50, and I'm looking to see if the market can just push its way back up to here. If we can break through those highs from yesterday, I think it does set up some decent momentum to maybe push up to 72.50. But I think it's interesting. I think the FTSE at the moment, we had a really quite a weak start this morning, but it has, I think, for the shorter term traders, I think this 71.60 level has turned out to be quite an important one over the last couple of days, and it does look like a logical place to put stop losses. The flip side of that is, I think if we see 71.60 break, I think the risk is we can see quite a sharp sell-off from here. But let's see what happens. So far, yeah, we've seen buyers happy to step in at 71.60. Right, that's a little bit on the DAX and the FTSE. So I think DAX maybe medium-term buying opportunity, FTSE short-term buying opportunity with this 71.60 level holding. Let's just have a look at some of the currencies. Someone's asked about New Zealand dollar, US dollar. Let's have a look at that. This is an old favourite, isn't it? New Zealand dollar, US dollar. I have to put my hands up. This is another trade I'm in. I've had a bit of a busy week this week because, again, let's just remind ourselves we have seen a great trend last year, New Zealand dollar, US dollar. So going, starting from the end of 2015. So we had our trend. The market, the New Zealand dollar had been weakening against the US dollar for quite some time. Then we saw a trend start to develop and then continue for much of last year or into September last year. And since then we've seen something of a weakness, but the story for this year, New Zealand dollar, US dollar, has been one of strength again. So let's just flip this over to an hourly. So we've seen some good trends this month. Look at that, New Zealand dollar, US dollar, right from the beginning of Jan. So what we're seeing here, of course, New Zealand dollar strength, US dollar weakness. If it's a New Zealand dollar, US dollar chart and the chart's going up, it's New Zealand dollar strength and US dollar weakness. So we've had great trends. Oh, hang on, I've drawn that in the wrong place. Let me just plonk another trend on. So we had this other trend which had stalled, I think, somewhat. There we go. But arguably, we're still in it. We're still in the trend. And what made me do the trades yesterday, it was a similar move to the FTSE, to be honest, where the news that we'd had the trend high sort of back here, which was the end of Jan, 31st of Jan, we'd had the trend high. And for much of February so far, nothing had been happening. Yeah, nothing had been going on. But again, yesterday, I think it's early hours yesterday morning, the New Zealand dollar, US dollar broke out. So it broke out. So to me, that signifies, okay, well, there's real strength there, and there's lots of levels to think about placing, your stop loss. You could, I mean, for me, my stop loss is just beyond there, beyond 72.50. I think if we start to lose those lows, that breakout becomes invalidated. Or you could take a bearish argument. New Zealand dollar broke out, but it gave up those gains pretty quickly. So if you had the opposite opinion to me, you could be short New Zealand dollar here at 73.06 with a stop loss above those highs, which is 73.80-ish, or maybe even tighter if you want to. But I think for me, that trend in New Zealand dollar is still up. So the right side of the market to be on is the long side, looking for the market to push higher with a reasonable stop, the other side of these lows that have held the market up pretty well. So it's gone a bit dull, to be honest, since I put the trade on. I bought at, I think, 72.85. I had an order in to buy, so I'm about 20 points in profit, but my stop loss is 50 points away, so it's not moved far enough yet for me to move the stop. But I think it's interesting that it broke out yesterday, suggesting that maybe that trend is going to continue. Let's see what happens. Another interesting currency, one I have missed out on, but again I think it's a bit like the dollar basket trade or dollar basket chart that we looked at the beginning, is the dollar against the Swiss franc. So let me have a quick look. So again, this chart does point to an argument for dollar strength. Okay, so this is the daily chart. This is the big picture chart. That was that awful move, of course, back in, I'm sure if you were trading back then, you remember this, January 2015, when the Swiss bank stopped intervening, and we saw the dollar Swiss absolutely fall off a cliff, and a couple of FX brokers, I'm sure you remember the time, with serious casualties, not to mention the clients of that move. Incredible, absolutely incredible move. But that was the move from back then, and since then, we've seen dollar Swiss has gone back up to those sort of pre-Swiss bank walking away levels, but hasn't really made much headway. But if we flick on to the hourlies, if we go there, it's a sort of, I suppose it is a similar sort of chart to that dollar basket chart. If we drew our trend line, I suppose it looks something like that. And I just think it's an interesting one because this is the first break through the downtrend we've had this year, like on that dollar basket chart. So again, this does point to an argument for the dollar to gain some ground here. We've got the first steps of an uptrend forming, so arguably something like that. The market, it hasn't quite pushed out to fresh highs today, but yesterday, the move today broke through the previous day's high, it broke through the high from last Friday. So I think we are seeing some strength. I had an order in to buy at 99.53, and I think it came within about 5 points of it, but I missed it. So for me, it's interesting because this could be the start of a major trend reversal on the hourly chart, at least. So for me, the first place I would have my stop would be the other side of this low from the 6th of Feb, which is only a couple of days ago, isn't it? So for me, it's an interesting one here to keep an eye on, that maybe we're seeing the first steps in a new trend for dollar against the Swiss franc. But I think when viewed with that dollar index chart, the dollar basket chart, maybe we will see a bit more dollar strength in the weeks ahead. But I think that's an interesting one to keep an eye on. Anyway, I think dollar Swiss. Let's talk about, let's jump onto some commodities, and then we'll do US stock markets, then we'll do a couple more currencies to wrap it up. But let's start off with the market I love to hate, price of oil. It's been really volatile a couple of days in the price of oil. My outlook for oil is still the same. I still think this could be the year of further oil gains, into the $60 a barrel mark. We saw this, this time last year, it was all doom and gloom for the oil price. Oil was trading at $26 a barrel, and now we're trading at almost double that. Oil ended last year pushing just about to fresh highs for the recovery. So I think we have to say that the longer term trend, or the trend over the last 12 months anyway, for the price of oil is still up. It's just been a bit scrappy trading, I think, in recent days, and nothing's really changed that. I'm not a fan of trading oil. I think I've said on numerous occasions, I never seem to get it right on the price of oil. So whatever I say now, you should do the opposite of. But I think it's interesting, the move now, the weakness we've seen over recent days. So it's come off from what, $54.5 a barrel to around about the 51 mark. If we have a look on the daily charts, whenever we've seen oil price weakness down to here over the last couple of months, back to the low 50s, we've seen the buyers come back in. So if you really want to be a short-term trader on oil, it looks like a reasonably good level to be a buyer down here. So I would still be inclined to be a buyer of weakness in oil. It just depends what your time frame is. But I think it's been a fairly scrappy couple of weeks. But whenever we've seen oil down at these levels, we have seen the buyers come back in. Now the more interesting one for me, is gold. I tweeted about this today. I wrote some stuff on my website that maybe the themes for this year: gold, oil, and pound recovery. And clearly, I wrote it and didn't bother buying it. I did actually buy yesterday, so late into the trend, thinking that this is going to be the top now. But look at it now. Look at the price of gold now. We're on new highs for this recovery. It's up about 7% for the year. And again, it's been a brilliant trend that I have completely ignored. But just look at the hourlies. Look at that trend on gold. Since we had the move from the beginning of the year, so we're beginning of the year move, actually from December. Market runs up to about 12.20, then sells off, breaks some support on the way down, but doesn't break this sort of quite sharp sell-off support at 11.75. Then the market comes back up again. Now the risk is it's going to run out of steam ahead of 12.20, but no, it's broken. Last Friday breaks, and since then we've pushed higher, and we're on fresh highs. So for me, the expectation has to be for this trend to continue. So I ended up, the move for me was again just the breakout over the last couple of days through this old high from last week, sort of 12.25 highs, and I bought a 12.31 or something like that. I had an order in to buy with a stop loss underneath the low from the day before. So I think plenty of us, me included, struggle to get in on strong trends, and I sit there waiting for pullbacks and just seeing the market moving further and further away. So I think one way for me, if I've got to bite the bullet and get on this trend, is to put a stop the other side of the previous day's high or low. So if I'm looking to buy and I think the trend is strong, put a stop underneath the day before's low. And if I'm looking to sell and I think this trend down is strong, put a stop above the previous day's high. Clearly it doesn't work all the time, but I think as a way of getting in on a trend and to stop the agony of watching it move away without you, I think it's one maybe relatively low risk way of getting in. But let's have a look at the bigger picture. So the trend for gold, clearly up. So for me, if we let's plonk our trend line on. So if I wasn't in it, where would I be looking to get in? Well, our trend line looks, well, let's plonk it under that one to be textbook on this. So there's our trend line, the latest leg from the end of Jan. So we've got trend line support about 12.25. The lows from today's lows, 12.30, then 12.28, then 12.25, then 12.21, then 12.14, then 12.07, and so it goes on. There are so many little support levels left in this trend that for me, any weakness has to be a buying opportunity. I think, I don't know, where would we say that it's over? I think if you were going to take a big picture view, you'd have to go on to the daily chart. So if let's look at the daily chart since the run started, this recovery started, and it started, I suppose, properly the 27th of December-ish. So for me, we'd have to look at something like that. So for me, it's only if we start to lose, I don't know, what should we say? Let's say 12.15. If we start to slip below 12.15, then maybe the trend's in a bit of trouble. But for now, I think there's just so much support being left behind. Personally, and of course this is not financial advice, personally I'd be looking to be a buyer on weakness. Obviously, if for the fans of the squiggly lines out there, I've got an RSI here. So the RSI is getting a bit overcooked. In a strong trending market like this, RSIs will move to extremes. The difficult bit is knowing how much farther the market's going to move. Because look, the RSI went overbought on the 11th of Jan, and the price of gold still moved up another, $20 or $30 before finally giving up the ghost. So the RSI has been overbought only for a couple of days now in gold, and it's still going higher. So it clearly it's quite overextended. But the question, as ever, and who knows what the answer is how overextended will it get before it starts to cool off again? But clearly a very strong trend in the price of gold there. So we'll see if that continues. But for now, classic trend following approach. I'd want to be a buyer of any dips. Let's wrap things up by looking at the US markets. We'll look at the Dow, we'll look at the S&P. I think the S&P has been interesting this week, but let's start off by looking at the market everyone knows, which is the Dow. So we're looking at what we're looking at here, daily chart. So we've had the market broke the legendary 20,000 level finally last week of Jan, and it's not really done much since then. A bit like the DAX, we've broken out, we've moved back into the range. It's a little bit boring. But you can't argue with the strength that we've seen since the election. The Dow is 2,000 points higher than it was the week before the US presidential election. So for me, the bias in stock markets, US stock markets, is still to be a buyer. Plenty of volatility. This is an hourly chart we're looking at. That was the run up to and through 20,000. The market sold off. So again, for me, when we've had a breakout, I'd just be looking to buy the dip. And in hindsight, this was maybe the better signal, the second test of these lows here before the market took off. It poked out to it looks like fresh all-time highs at the beginning of yesterday's session and then gave up those gains pretty quickly. But for me, I'm still looking to be a buyer. And I suppose that the closest you'd want your stop loss, the closest I'd want it would be, first of all, underneath yesterday's low. If I was a buyer, let's see what that looks like. So yesterday's low was the 7th. So if we're looking at the, actually it looks like it's below yesterday's low. If we're looking at the in-hours low, where did it close? Well, it closed there. So it's just now on the lows of yesterday, and the close was the low of yesterday. So it'll be interesting to see how it performs today. So around about 20,050, 20,055 was the low. So that could be an interesting level to watch. See if you can see some strength into the open. But failing that, there are these lows from back here from earlier in the week. So for me, I think the Dow is going to snap back and have a look at these levels up here. It's just how deep that sell-off goes. But I think we get a clearer picture on the S&P. I've done a couple of short-term trades on the S&P this week because, again, we've got some really clear support. That's the bigger picture. The daily chart looks like that. Market that has been trending higher. If we look on the hourlies, we can see, there we go, that's the last couple of weeks on the hourlies. Again, some big levels down here. If we saw the S&P drop 20 odd points from where we are now down to the sort of 2270 level, it looks again like a buying opportunity. But for the really short-term traders, there's been a really good level that has played out this week. There we go. And it's been these lows that were set right at the beginning of the week ahead of sort of 2288. So this was February the 6th, which was Monday, wasn't it? That's Monday. So the market drifted off, then rallied. That's the overnight session. Then yesterday's session comes back down again to about 2290 and rallies. The overnight session back down again, 88 is held, and we're currently trading at 2289. So I think for short-term traders, this 2288 is a big level to keep an eye on. I think for this afternoon, if you're going to sit there and click buy sell on the S&P this afternoon, I think 2288 is a really big level to watch. So we'll start wrapping things up there. I think, like I say, I think maybe it's a quiet week this week. There's not much on the economic calendar, so there's not much sort of expected news to push markets around. For me, maybe currencies are the ones to watch this week because we've seen the pound weaken. We've got that dollar Swiss chart, which I think is the really interesting one. That maybe we're seeing, and on the hourly chart is the better one. Maybe we're seeing signs of a US dollar comeback after quite a pronounced slide. In commodities, oil has moved down to the low of its recent range, so there's an argument for a bounce in oil. The DAX and the FTSE are interesting because they've got big support levels just below where they are now. So again, there's an argument for them starting to rotate their way back up. And gold, because it continues to do what it's done all year, which is just go up. And the question is, how much higher is it going to go before it starts to fall off? Hopefully another $200 higher. That made me very happy. But that's maybe expecting a little bit too much. I think we're definitely due some sort of slide, but as of now, it's not really happening. So we'll wrap things up there. I wrote some stuff. I said I was going to start writing some stuff more about social trading, and I did that this week on my website. So if you go to, let me just bring out the details. I've opened up an account, an extra account to do social trading with. There you can see my Wikipedia dollar index. But if you go to the website, tradeafter.com or jonesthemarkets.com, the latest blog post I've done is on putting a couple of £1,000 in an account for social trading and following the first trader, and I'm going to blog regularly about that. I'm doing a webinar on social trading with Aondo probably next week. I'll tweet that out, and we'll do this webinar again, of course, next Wednesday. But I think even though we're a bit quiet on the news flow front, plenty to keep an eye on. So we'll wrap things up there. If you've got any questions, let me know. I'll try and answer them, or maybe point you in the right direction of answers. But any questions, do let me know. I hope you have a good week ahead, and we'll do it all again this time next week.